Hello, everyone, and welcome to another episode of the Financial Advisors Want to Know podcast. I'm Catherine Tindall with Dominion. We're a specialty tax and accounting firm specifically for advisors. And on today's episode, I have with me Carolyn Armitage. She is a serial builder of wealth management firms and has a very unique perspective, being, formerly an advisor, and she's been operating and working with small and large firms, doing a lot of industry consulting and has been working with dealing and leading with high performing teams, creating value in the organizations, integrating groups within them, and keeping things, moving forward as the industry continues to change. She has a firsthand knowledge and deep empathy for the challenges that advisors face, being formerly an advisor herself. And as an expert, she offers RIA consulting for CEOs. And her RIA expertise has evolved from leading numerous firms and investment banking and has just been in the industry for years. So I'm looking forward to this short but sweet conversation with you today, Carolyn. Thanks for coming on the show again.
Thank you, Catherine. It's my pleasure. It's nice speaking with you again.
Yeah, so since we last talked, Carolyn has launched the RIA Circle Group and has been leading wealth management consulting. In today's conversation, we wanted to talk about something we've both been seeing more and more of, which is the shift of advisors moving into the more independent RIA space. So, since we last talked, how have you been seeing things kind of shift around and this push happening more and more in industry, Carolyn?
Yeah, I think as advisors become more educated, whether it's in the wirehouse channel or it's through a captive group that they're in, advisors are becoming more and more educated, and they want to unlock the value of the client relationships that they have built up over 10, 20, 30 years. And that all can always be monetized in a warehouse and
Yeah.
not in the captive agency as well. So moving to full independence allows them to offer more and independent, non-proprietary offerings and services. And it allows them to really take advantage of the capital, the goodwill that they have built up with their clients over the years, whether it's through starting their own RIA or joining an already successful RIA and either participating that in a full turnkey fashion and or owning a slice of that entity and participating as that entire boat rises. So it's been a really exciting time, and we expect the next decade to continue with the same
Yeah, I
movement.
feel like the vast majority of my conversations with advisors the last couple of months, everybody's got their eye on the door to going independent. And maybe that's just the circles I run in. But, I think for a lot of them, on my side, because we're looking at the tax consequences. And then also, a big component of it is, well, if you're going to be plugging into somebody else's platform, that's going to be much simpler for you versus, okay, if you're going to start up your own RIA, there's a whole huge laundry list of administrative things that go into that, which we do have something like that available. So if people are interested in that, you could send me a DM. I'll send you over the checklist we have for it. But, in terms of when you've been seeing advisors kind of eyeing the door on the move, what are some of the, biggest challenges you see them facing with that? And also, stumbling block pieces of what prevents them from doing it, or, initial issues that they encounter that they might not be, you don't see it until you're actually in it. How has your experience been, kind of consulting in some of these situations with those changes?
Yeah, I think the biggest challenge is the fear of the unknown,
Yeah.
right? Change is scary for a lot of people. I'm one of those weirdos that I love change. I embrace it. That could be a whole therapy session in itself, but most folks don't like change and they kind of fear what they don't know, right?
Hmm.
And so they'll start the conversation of like, I don't know what I don't know. And they don't want to make a mistake, of
Yeah.
course. And so that's where these turnkey models are more of a nice comfort zone for advisors who are moving from a fully supported, whether it's an agency channel like a proprietary insurance firm, or it's a wirehouse where they have everything supported and their job is to go meet with clients, keep them happy, and find more clients and bring in that revenue. They can operate in that happy space within the independent space as well in a full turnkey model. Or nowadays, there really are so many consultants that can help you launch your own RIA. You can have full operations consulting, you can have full compliance consulting, full strategy consulting, and tax consulting, right? That you do. And so there's more support than there ever was to launch your own RIA. So I do think both are accessible. It's a matter of what risk appetite the advisor has and what their time horizon is. Do they have 5 years till they want to exit and retire, or do they have a longer time frame? Are they wanting to build up an empire and really be a national footprint for our industry? Or are they looking to keep their business fairly small and contained and work as much as they want to work, but not have too much pressure of a larger organization? Either way, they can unlock the value of those client relationships by moving to the independent space. And, interesting, you're in the tax side of this as well, which I love that. One of the tactics that I have used, whether the advisor is moving into the independent space or they already have been in that for a while and they're looking to partner with another organization for a succession plan or for scale or for growth, is to do a stock swap.
Mhm.
When you do the stock swap, essentially you are either buying a firm or your firm is being purchased. Instead of with cash, it's with their equity. And so it is not a taxable event at that time. And as you create this larger entity, oftentimes the multiple that your business is worth increases. And so not only can you merge together and have more and deeper resources, oftentimes more specialized services for your clients, perhaps alleviating you from some of the administrative work that you may not like to do. Plus, it's not a taxable event at the time, and down the road, when you're looking to retire, you can sell out your units or your shares, depending on the type of entity it is, and reap the benefits of that larger scale success.
Yeah, absolutely. And I think for a lot of advisors that I see kind of go through this transition, they a lot of the questions that always come up in my mind when they're thinking about this, or they're going to be maybe they were broker dealer, they're going RIA this year, or, they're thinking about joining with another already existing RIA and being 1099 under them. The huge question is always like, well, what's the exit plan? It's like, how long do you want to be in this? Like, how do you want to get out of this? You know, how important is it to you to really monetize your exit out of the practice, and like what does that look like? And then on top of that, the day-to-day pieces, right? Like, do you want to have, where you just send an email and everything else gets dealt with, or do you want to be the kind of person that's engineering these systems and collaborating with people? But I think for a lot of people, it's having those kinds of conversations and then realizing that there's like multiple tools that you can use to get to the places that you want to go, like with what you're talking about with the stock swap. Or, I'm always a fan of like, especially if it's a smaller practice or it's just a solo advisor that's breaking off, it's like, okay, well, let's just keep things as simple as possible on like the tax and legal side. And like, how do we get things functional for you for what you're trying to achieve? And then we can make this more complex over time, like how,
Mhm.
moving in that kind of direction. Because I think for a lot of them, they can get overwhelmed with all the decisions that like all the paths that you can take.
Definitely.
And so I always start off with them. It's like, okay, well, functionally, what are the outcomes that you want from this? Like, what's not working in the current environment? What could you get better? And then I think for a lot of them too, having the bigger conversation around, this practice that you're building up is probably going to be by far and away the largest individual piece in your portfolio, right? Like some of the multiples that I've been seeing have been pretty impressive in some of the succession planning I've been a part of recently. And I think for a lot of advisors, like they just don't even realize what they're sitting on a lot of the time, and that making certain changes in how they're structured, what they have rights over, how operationally like self-contained the practices and everything will really change will really change those numbers. And it has a huge, swing, especially if you're going to be building in, a certain environment for like 5 to 10 years. It really shifts it around. And like what you were saying with the, if you can combine two practices, all of a sudden that multiple goes up, right? And I think having an awareness of that component as well as just like, okay, well, day to day, what are the outcomes that you're looking for? But have you seen any, serious stumbling blocks that have made people go independent and then, regret it, or go independent and then, encounter difficulties that they weren't expecting? Like, are there common stumbling blocks people come across in your experience?
Yeah, that's a great question. And of course, I have. I would say the vast majority of advisors who move to independence are wish they had done it 5, 10 years earlier, right? You always
Yeah,
get the
I hear the same thing. Yeah.
response of like, why did I wait so long?
Yeah.
What is interesting is what I have seen are some of those advisors who might be in that, call it 100,000 to maybe three, four, 500,000, 500 million, excuse me, um, asset size, who went and created their own RIA, and they find that it's a lot of work. And of course,
Yeah.
it's a lot of work, right? Our entire industry is a lot of work. But they find that the administrative side of running their own RIA is one, not enjoyable. And it's more work than they expected it to be. And they
Hmm.
may not be at the right size where they can hire in a COO to take over some of those administrative capacities. So the founder owner is kind of stuck with doing all of that work. And that's where you'll see some of those folks that started their own RIA are looking to stay fairly small and nimble and have the control that you were just referencing,
Hmm.
join other RIAs so that they can offload some of that operational and compliance and sometimes managerial work to
Yeah.
others so that they can stay in their happy place. I find this especially true as folks get closer and closer to their retirement. They're looking
Yeah.
to sunset their career based on what they love to do. And oftentimes that's when they first got into the business, and that's working with clients,
Hmm.
servicing them, sometimes not even servicing them. Sometimes it's, the thrill of the hunt and being able to do that new business development, going
Hmm.
out and sharing the story and getting clients excited to invest with their firm. And so by joining a larger group, they can offload that other work and stay in their happy zone.
Yeah, I love that. And that reflects the experience that I've seen a lot too, where they'll go RIA because they're fed up with the current environment, but then and them setting up their own, but then they don't realize that, oh, okay, this is going to be extremely painful for the next 2 to 3 years while I professionalize everything that I was getting previously. Um,
Right.
and
Yeah.
where I was just seeing this as an expense line, and now it's turned into oh, like now I need to be working with consultants to get certain things done, and nobody sees the whole picture except for me. And it's kind of those teenage pain years. Like it's exactly what you were saying too. It's like I see it the same from like the 100 million to 500 million. It's like that painful professionalization that has to happen. And they have a lot of frustration around the finance function. So it'll be, they're used to doing financial advising for their clients, but doing like FP&A work for an organization with multiple employees and like multiple consulting and just all the things that go on, it then
Mhm.
becomes quickly like the finance function becomes really convoluted and difficult for them. Like, well, how much profit are we going to make this year and how do we want to spend it? And what am I going to have to pay for taxes? Like, how is all this going to shift around? Or I'm going to do an acquisition. Can I afford that? Can I afford that from an operational perspective? Can I afford it from a cash flow perspective? Can I afford it from a like how many plates am I spinning perspective? So it's funny the pain line that people hit. I'd love to hear a little more about the work that you've been doing recently on the consulting side, and then also with the study groups that you've been coordinating with different RA operators. I'd love to hear more about that.
Yeah, thank you. And a year ago, it's actually been a full year now, I launched my independent consulting business for independent advisors. At the beginning of this year, I rebranded, and the firm is called Wealth Management Consulting. Interestingly enough, just yesterday I got a new lead from someone that is what they put into Google, and sure enough, my firm came up, and it was just what he was looking for.
Nice.
So, because I've been an advisor and I've ran a branch office and I've ran multiple organizations, both small and large, I am able to help advisors on their strategic planning side. And strategic planning is a nice big catch-all bucket, but it's kind of going on that notion of what you were talking about earlier, of starting with the end in mind of what does success look like for you? 5, 10 years, 20 years down the road. What are you hoping to accomplish from this? What are the pain points? What are you trying to avoid? And determining what those are. And then I can show them all the various paths to get there and what some of the stumbling blocks along the way are. What's their most optimal path for success based on success in of their definition. And so I do quite a bit of that strategic planning work. Essentially, it can be a second opinion. It can be outside validation, right? When a firm has several owners and they maybe have differing viewpoints, don't agree, they want that outside validation of which approach they should take when they come to that fork in the road. The second area I spend a great deal of time on is the human capital side. So this is how do you hire and find the right people? Do you have job descriptions? Do you have the right compensation structure and incentives, both cash and equity incentives? And this could be true for your employees and your advisors. So I do
Mhm.
compensation programs for both of those groups. It could be just executives. I'm doing one presently on a new CEO package for a new entity that's forming. I've done tons of advisor comp packages for both independent 1099 advisors, as well as the employee or partner model that is more increasingly common in the marketplace for RIAs.
Mhm.
So having the right incentives in place will change behavior. There's a direct correlation in that. So I help alignment of the firm's objectives with the compensation structures and put those together, even going through and helping align what the attorneys draw up for the clients, ensuring the intent of, yes, based on the plan and what outcomes you're looking to achieve, the language is appropriate there. Um, well, of course, I'm not an attorney. I do often work with clients' attorneys and their CPAs to put the right equity plans in place. And then also, on the other side of that, one element folks forget about is you may have all these great incentives and you may have the right people on the bus, so to speak. You've got to make sure you've got some review performance metrics that you're going after so that you give people good feedback, you give immediate corrective action if that's needed, you provide the attaboys where it's appropriate, and you make sure people are on track. So I also help organizations put in place the right performance management tools in an easy fashion based at the level they're at so that they can provide that feedback to their employees and advisors.
Yeah, that's great. So for firms who are looking to go deeper in your world, Carolyn, what's the best way for them to learn more about the work that you're doing?
Yeah, thank you. So you're welcome to look me up on LinkedIn or go directly to the website, wealthmanagementconsulting.com. And you can set up a Calendly appointment so that we can get to know each other and see if it makes sense to work together. Or send me a LinkedIn and send me a message, and happy to respond to that as well. And then additionally, I didn't mention, so a year ago is when I started the consulting firm, right?
Hmm.
And I love doing that work. I can only realistically handle working with about a dozen clients at a time. And working with a client might be a couple of months, 2, 3 months. Sometimes it's a full year. It depends on what they're looking for and how much support they want. So I do have clients rolling off and rolling on each and every month. But I wanted to find a way to help even more folks. And quite frankly, I don't feel a consulting firm is very scalable because I've got over 35 years of experience in the independent industry. And it's hard to transition that experience, that wisdom to somebody else that I might hire to help me in
Mhm.
scaling.
Yeah.
They can do some of the spreadsheets and such for me. I just don't feel the true wisdom and guidance and some of the nuances that are so critical in our business can be transferred so easily.
Mhm.
So I came up with a concept for RIA Circle to be able to serve more folks in our industry. And one thing that I've found very successful throughout my career are advisors helping advisors, right? When you go to a national conference and you're standing in the food line waiting to go get your salad and lunch or what have you, you meet a lot of interesting advisors and you start picking their brain about a particular topic or an area where you're having some challenges. And most advisors are very willing to share.
Mhm.
In that environment, it's often non-confrontational because they're probably in a different part of the country than you are. So it makes it fairly riskless. But oftentimes that conversation is very short and not ongoing. So RIA Circle is a platform for advisors to come together from all across the industry in the independent side of our channels, I guess we call them, versus a captive or warehouse channel or bank channel. And these advisors come together each month to form a study group. And I put together a master agenda. Each group can follow it or they can create their own based on what's going on in their own practices and businesses. And they share out and work through issues. It's a fabulous mastermind group where advisors help each other. And then we have a really robust online platform of resources that they can tap into, including educational sessions and, mapping of all of the advisors. So if they happen to be headed out to LA and they're like, I want to meet a couple of advisors in the group, they can meet with them.
Mhm.
Um, we just surpassed our 6 month mark for RIA Circle, and it's going beautifully. We've launched an iPhone app as well as an Android Google app, and we have a lot of exciting new offerings coming up over the next 6 months that I'll kind of hold off for some of that till the announcements come out. But it's been a tremendous growth platform, and the advisors who are participants absolutely love it.
That's awesome. Yeah, so definitely for those of you listening, check it out because we've actually had a couple of I don't know if you know this, Carolyn, but I've had a couple of clients on the side who've been in your program that have spoken
Oh,
very
great.
highly of it separately. So definitely check it out if you're interested in getting into groups like, Carolyn's group, just because I've found for the, a conversation that we have with a lot of clients is, what are you doing for coaching? Like, what are you
Mhm.
doing for your own support? Because unless you're feeding yourself and having those kinds of relationships with other advisors who are trying to do the same things you are, it can get really lonely when you're running an
It is.
organization by yourself. And it can also be you're doing everything right, but it's just, when it's just you, or if it's just you and your partner, you're like, well, what's everybody else doing?
Right.
It could
Right.
be, it's such an opportunity to do that. And I think it, like you were saying, in today's environment, it's with some of the numbers with how many people are leaving industry versus like the need of things, it's um, I find that a lot of advisors are very open to sharing with each
Mm.
other, and it's a really wonderful environment. So I want to thank you again for coming on the show today. And we'll be posting the links to the wealth management consulting, Carolyn's LinkedIn, and then any other links we mentioned in the show that people are interested in. You can always, for people listening, you can always feel welcome to send me a DM if you have any questions about things on our side. But we'll be posting those links wherever you're encountering this podcast. So, Carolyn, any final thoughts before we sign off for today's episode?
Yeah, thank you. I really appreciate our collaboration together and appreciate you mentioning RA Circle. I do think it's one of those platforms where you get out of it what you put into it. So the number one thing I find that's like an objection in joining is time.
Mm-hmm.
Right? So it's like, oh, I don't have the time. But just like you were saying, right? It is hectic day to day working in the business. And just every once in a while, you need to pull back and take a look at the big picture and say, am I doing what I need to do to be successful? And working with your peers can be validating, right? You can walk away and say, oh, I'm doing this great, right? Or like, oh gosh, this guy, I'm glad I'm not that guy and dealing with those issues. Or I dealt with that many
Yeah.
years ago. Let me show you how that works. And you can get quick little fixes for issues that you're going through and realizing you're not alone in this industry. Being independent does not mean you're alone. You have a
Hmm.
big community out there, and this is a safe space. Folks are very confidential in what they share in their groups, and they keep it within their groups. And it is a terrific platform for those of you looking to go independent and want to kick the tires. In fact, if you're at a wirehouse or a captive firm right now and you're considering going independent, it's an excellent way to get to know folks and ask questions before you make that leap. So that's
Yeah.
something to consider too.
Yeah, absolutely. And see kind of on the inside of what they're
Yeah.
experiencing, and even beyond that of the, well, hey, if you don't if you don't want to have to start from scratch, get to know who's out there, because I know for a lot of our RIA clients, they're trying to build platforms that allow people to plug in. Like they want to build infrastructure so that they can make it accommodating for other advisors to plug into what they've built. And I think for them it comes, unlike what I tend to see on the big institutional level with these RIA firms that have that mindset, they really are more advisor centric. Like they're advisors themselves, and so they're trying to build platforms that are more, um, they coming from the place of understanding what the need is for the advisor that's going to be plugging in, and really the feel is very different, at least in my experience of what the advisors who join those platforms get out of it. But so, Carolyn,
Yeah,
I want to thank you again for coming on the show. For those of you listening, this was another episode of the Financial Advisors Want to Know podcast.